Right, good day everyone. Welcome to Accounting Masterclass. Today I have decided to just draft an example on the board wherein we are unpacking some of the adjustments for the income statement. And the adjustment I am focusing on today is provision for bad debts. And this provision for bad debts, you can get it from grade 10, 11 and 12. So it's very important that learners need to be clear as to how do you go about solving an adjustment that has got to do with provision for bad debts. Provision for bad debts is the total amount of doubtful debts that needs to be written off for the next accounting period. It is the total amount of doubtful debts that needs to be written off for the next accounting period. Right. We have this pre-adjustment trial balance on 28 February 2021, and we have the balance sheet account section and the nominal account section. We have our debtors control here to the total value of 414,800, and right now the amount provided for bad debts, we have set aside 20,000, which is provision for bad debts on 28 February 2021. And under nominal account section, our bad debts for this year amounts to 54,200, and we want to look at increasing provision for bad debts. Let's start by looking at the first adjustment. The first adjustment, it says write off the long overdue account of piecemeat 9,000, and we want to look at how this adjustment is going to affect the income statement. When you are doing the income statement, how will this adjustment affect the income statement? I am not going to write the full income statement, but I will just go straight onto the section wherein this adjustment will be recorded, because this section is affecting bad debts, so it will be under operating expenses in the income statement. It will be under operating expenses in the income statement, and it will be operating expenses, bad debts, because we are writing a further bad debts of 9,000. It means the current bad debts valued at 54,000, the current total, which is 54,200, will then increase because we are writing a further bad debts of 9,000. So our bad debts will then increase by 9,000. So which means that your total bad debts now for the year under operating expenses in your income statement will be 54,200 plus 9,000, and that will equal to 63,200. And it is very important for students when they are doing the income statement to make sure that your workings must be shown in brackets. This 54,200 must be shown in brackets. This is 54,200 is coming straight from the pre-adjustment trial balance, and there is this adjustment of a plus 9,000, because sometimes in your memos you will find that these workings will also be allocated a mark. So it's very important for a student to show the workings when you are doing these adjustments. So your bad debts, the first adjustment will be affecting your bad debts, which will be recorded under your operating expenses. Your bad debts are increasing. But you will then have to note in your question paper that the bad debts are also affecting debtors control. So it means there is going to be minus 9,000 here. You will just note it in your question paper that if you are writing off the account of a debtor who is long overdue, then it will mean that your debtors control account will decrease by 9,000. In fact, writing off bad debts, there is two accounts involved. It is your debtors control account and bad debts. Bad debts account is debited as an expense, which will mean that your bad debts will increase, as we have done there under operating expenses. Our bad debts have gone up by 9,000, and it is now a total of 63,200. And therefore your debtors control account will be credited, meaning that your debtors will decrease. It's like you are taking off the 9,000 from the amount that we are expecting to receive from the debtors, and we are recording it under bad debt. So it's reducing debtors control and increasing bad debt. So this is how this adjustment is going to be treated. But because debtors control is part of the balance sheet account section, it will not be part of your income statement. In your income statement, bad debts will only be reflected there. 54,200 plus 9,000 equals to 63,200. Right, and then the second adjustment. The second adjustment, it says adjust provision for bad debts to be 5% of debtors. So provision for bad debts must be adjusted to be 5% of debtors. So now your calculations, your debtors in the pre-adjustment trial balance was sitting at 414,800, this debtors control. But adjustment number 1 has adjusted debtors control by reducing it by 9,000 rands. So it has now been decreased by 9,000 rands. So let's look at the latest balance of our debtors control. So that is why I said it is important for a student to just go with a lead pencil and indicate the minus 9,000 next to debtors control, so that when you go to adjustment number 2, you will not forget. Because the mistake that will be made by the student is to calculate provision for bad debts using the 414, forgetting that this amount has been adjusted by the first adjustment of 9,000. So our debtors control has gone down by 9,000. So 414,800 minus 9,000. So our debtors control now are now sitting at 405,800. 405,800 because of the 9,000 that has written off. Right? So adjustment number 2, it says adjust provision for bad debts to be 5% of debtors. 5% of debtors. So what is 5% of this debtors control amount? 405,800 multiplied by 5%. 405,800 multiplied by 5%. 5%. So 5% of this is 20,290. So provision for bad debts should now be 20,290. So how much, the question is then, how much are we currently having in our provision for bad debts account? The amount that we are currently having is 20,000. And according to adjustment number 2, provision for bad debts must be 5% of debtors. And 5% of debtors now is 20,290. So this then tells us that this 20,000 must now be increased to 20,290. That is why we are saying we are dealing with increasing provision for bad debts. So the increase, we are going to increase it by 290, and because we are increasing provision for bad debts, there will then be an account that is going to be in your income statement under operating expenses, which is called provision for bad debts adjustment. It's not the same account. This one is just strictly for an adjustment. Remember, this one is provision for bad debts and it falls under balance sheet account section. But this one, provision for bad debts adjustment, is a nominal account. It falls under nominal account section and is going to be your part of your income statement. And what we want here, we only want the adjustment. That our provision for bad debts is currently sitting at 20,000. According to the adjustment, it should be 20,290. It should be 20,290. So we just have to increase it by 290. So the difference between 20,000 and 20,290 is only 290. So the adjustment is 290. So provision for bad debts adjustment is 290, and in this case, this provision for bad debts adjustment falls under operating expenses. Increasing provision for bad debts is an expense to the business. So because we are going to increase, we need to go and add another 290 to that 20,000. So that 290 we are going to add in the provision for bad debts to make it 20,290. We call that 290 provision for bad debts adjustment. And that provision for bad debts adjustment is an expense to the business, and therefore it will be recorded under operating expenses. So you must always remember that when you are adjusting provision for bad debts, first thing that is important is for you to work with the correct debtors control total or the correct debtors control balance. Sometimes you will notice that the debtors control balance given in the pre-adjustment trial balance will be adjusted by bad debts. So in that case, it means you won't have to work with the amount given, like 414,800. You would have to consider that there has also been bad debts that has been written off for 9,000. So you will then have to subtract the 9,000 so that you are able to work with the correct amount, which is 405,800. And by working with the correct amount, it will then lead you to calculating the correct provision for bad debts. Like in this case, the correct provision for bad debts is 20,290, and we are currently having 20,000. It means we have to increase it by 290. So increasing provision for bad debts, then provision for bad debts adjustment will then become an expense. So it will be included in your income statement under operating expenses as 290.